If it is processing time per unit, which is also given, already given per unit in terms of minutes is given. But the total processing time has to be calculated. So let's quickly calculate. There are three products, L, M, and N. We have the units, the production. Units are given as 300,000, 300,000, and 150,000. After that, we have the processing time per unit. Processing time per unit gives us, this is 4, this is 6, this is also 6. Okay. So total processing time, what is the cost per unit attributed um, to these products? So what's the processing cost? Processing cost, the total amount of processing cost is, we see it as 156,000. Okay, that has to be attributed in the ratio of 12 is to 18 is to 9. Total is 39 parts. So here this would get into 12 divided by 39. Here it would be this into 18 divided by 39, and here it would be this into 9 divided by 39. Okay. After the processing cost is charged, we need to know what is processing cost per unit. So it's 0.24 for product, no, L, no, 0.16 for product L. For M it is 0.24 and N is also 0.24. Then question number 24, let's take it up. HZ makes 3 products and is considering changing to an activity-based costing system. The quality inspection costs make up 14,140 of the total production overhead cost. Driver analysis of HZ revealed the following information: A, B, and C. Production, budgeted production is given. Production units per production run is given. Quality inspections per production run is given. The total cost attributed to product C for quality inspections using an activity-based costing. So only the quality inspection. The cost is 14,140. 14,140 should be allocated based on the quality inspections per production run. Production, quality inspection per production. Let's start question number 24. We have the inspection cost as 14,140. quality inspection production overhead rate is equal to, we have quality inspection cost divided by quality inspection cost divided by number of quality inspections. Now quality inspection per production run is given. For every production run, the number is given, but total number of quality inspections are not given. So quickly let's prepare that. First we have the budgeted production, then we have the production units per production run. It's not a unit per unit, it's total cost. So even if we write also, just write budgeted units. These are 1000, 1200, then we have it as 800. After that we have it as production units. Five, 4, 2. Production units per production run. Per production run, this will now. So how many production runs? So number of production runs, which will be, if in one run there are 5 units, altogether 1000, how many runs? So that way we find out for all the 3 products. After that we have quality inspections. Per production run. So that would be, it is 10, 20 and 30. So number of quality inspections, number of quality inspections, which will be number of production runs into inspection per production run. So 20,000 is the number, and then quality inspection cost is given as 14,140. So calculate what is the quality inspection overhead rate. So that would come up to be as 14,140 divided by 20,000. Check that. 0.707. So now how much would be charged to each of these products? So I'm taking it here. Now we can continue with that. Quality inspection cost charged to products. So this rate we got it at 0.707. Okay, that into the number of quality inspections. I think they are asking us for product 6. See, from the exam kit, this is the last question on ABC. The numerical questions which are there under ABC. ABC will be in detail done in E2, P2, P2. P2, this will be taken up in detail. P3 it is not there. P2 it is there in detail. Much advanced questions are also there in P2. So you can practice more number of questions in P2. The next topic what we have is other elements of cost. So what are the other techniques is what we will look into. After ABC, other costing techniques. Under other costing techniques, we have throughput costing, joint product costing, and then digital costing. So throughput costing, first, before we understand about throughput costing, we have to understand that this is a modification of another technique used in cost accounting. That is called as key factor analysis or limiting factor analysis. I don't know whether you've learned it or not. As a part of decision making analysis, that is learned. So that talks about, let's say if there is a constraint, if there is some limitation or some restriction or some shortage of some resource availability. In such situation, what is done is the focus will shift towards the constraint. One example let's take about how to understand this part is, let's say a student um, attempts to write in during the examination. um, Suddenly he realizes that the time availability is only for half an hour time is only available, but realizes that there are two sections which the student has to write. One is an essay, answer has to be written, another section with MCQs has to be answered. In that case, only half an hour is there. So then within this half an hour time, that limiting factor is availability of time. He doesn't have abundant time. Restriction is only to the extent of 30 minutes. So what does he do to maximize his marks? He would take up a section wherein marks can be maximized. So we can understand that maybe short answer MCQs will give him marks, will be able to finish the MCQ section, and also if possible at least a part of the essay can be attempted. But if he starts writing the essay, it may not be sufficient. MCQs would not be touched. So the decision depends on, for every single minute of time availability, what are the marks which he can score, what are the maximum marks. So maximization of marks considering the constraint. So that is the situation. So also in a business, we see that many resources or they could be limiting in nature at different points of time. So at one point of time, if there is any one constraint which is there, so the key factor analysis is what is taken up. So in this example, what I quoted is about the marks. Marks is the criteria. That's the benefit. But in a business, it is the profit which is the benefit. So um, like marginal costing, which says that because fixed cost it doesn't change, The final profit is not considered, but only the contribution which is considered. So contribution, so every single unit of that constraint, how much contribution is earned is the criteria. Every single minute of time available, how many marks are scored, like that. For every single unit of the constraint, how much is the contribution available. So that is what is calculated. Focus shifts towards the constraint. So every unit of the constraint, how much contribution. The same concept is applied here also. It is the same concept, but there is a modification. What is contribution? Contribution is, we have the contribution as sales minus variable cost. Contribution is equal to sales minus variable cost. But that variable cost is modified here in throughput. Here the assumption of what is variable cost is only the material cost is considered as the variable cost. So sales minus raw material, only the material cost is considered as variable cost. So that is called as throughput contribution. Throughput contribution is selling price minus material cost. What about direct labor? What about variable overhead? Here they are assumed to be as operating expenses, therefore they are taken to be as fixed cost. They are not variable cost here in case of throughput costing. Traditional costing treats them also as variable cost. So we have sales minus material, labor, variable overhead, all of them deducted is contribution. That is the traditional method. But here only material is seen as variable cost. All others are seen as fixed cost. So that's the difference. The rest of it is the same. That is, per unit of the constraint, how much is the throughput which is allocated. Then after throughput is calculated, they also extended to find out what is the throughput accounting ratio. Throughput accounting ratio is, um, return per factory hour divided by cost per factory hour. How do we calculate return per factory hour? What is throughput? That is contribution, what we understand. Contribution divided by product's time on the bottleneck resource. Bottleneck resources is the constraint per unit of the constraint. Okay. So that is return per factory. Cost per factory is total factory cost divided by the total time available on the bottleneck resource. So that is the concept of throughput accounting. Um, Quickly, let's look into whatever are the questions about throughput costing. So question number 26, I hope you are able to see the Excel file. Yeah, I'm little worried and tensed that there's rainfall again started. So by any chance, if I get disconnected today, you please don't wait. Only half an hour time, no. So you can log out if we get disconnected. Otherwise, we'll continue till 5:30. But by any chance, if I get disconnected, you can also leave. 26, question number 26. So company B uses a throughput accounting system. Details of the product per unit are as follows. Selling price is given, material cost is given, conversion cost is given, time on bottleneck resources 8 minutes. So what is the return per hour? So what's the formula for return per hour? Return per hour is equal to throughput. What is throughput? Sales minus material cost divided by product time on the bottleneck resource. So let's take the same thing and then 26, question number 26. We are asked to find out what is return per hour is equal to, the formula says throughput divided by time on bottleneck resource. Throughput will be selling price, which is 50, minus the material cost, which is 16, divided by the time on bottleneck resource, which is 8. We have it as 50 minus 16 is 34. 34 divided by 8. So that is 4.25. 4.25 in terms of throughput per minute we got it as, but we want it as per hour. This is 4.25 per minute. So let's make this one as 4.25 into the number of minutes, because we want it the for 1 full hour. So 1 full hour. So 200, okay, see, 255 per hour. Question number 27. A company can produce many types of product but is currently restricted by the number of labor hours available on a particular machine. At present, this limitation is set at 12,000 hours per annum. One type of product requires materials costing $5, which are then converted to a final product that sells for $12. Each unit of this product takes 45 minutes to produce on the machine. The conversion cost for the factory are estimated to be 144,000 per annum. Throughput accounting ratio for this product is, what is throughput accounting ratio? Throughput accounting ratio is equal to return per factory divided by cost per factory. Written per, here it is labor hour. So let's put it as written per hour divided by cost per hour. So now first we have to find out what is written per hour. Written per hour is equal to, the formula says throughput divided by, what's the formula? Throughput divided by um, time per time on the bottleneck resource. So how much time is there. So that let's see, first check what is the throughput. At present, this limitation is set at 12,000 hours per annum. The material cost is $5, which are then converted to a final product. Selling price is 12. So we can find out what is throughput. Each unit of this product takes 45 minutes to produce on this machine. Conversion cost is 144,000, which is fixed cost. Right now, it's not relevant to us. Okay. See the selling price is 12 minus 5 divided by 45 minutes. Minutes is given. So what do? We have to multiply the entire thing into 60 minutes. So the entire thing has to be multiplied into 60 is equal to 12 minus 5 is 7. 7 divided by 45 into 60. Then we need to find out what is cost per hour. Cost per factory hour is equal to total factory cost divided by total time on bottleneck resource. So total factory cost divided by total time on bottleneck resource. So we see that total factory cost is given as 144,000. The conversion cost for the factory are estimated at 144,000. At present, this limitation is set at 12,000 hours per annum. So the total number of hours are also given as 12,000. So 144,000 divided by 12,000. So that should be 12, I guess. Get 12. So now we can find out what is throughput accounting ratio. Is equal to return per hour is equal to 9.33 divided by cost per hour is equal to 12. So is equal to 28, question number 28. A company produces two products S and T which pass through two production processes X and Y. Time taken, the time taken to make each product in each process is given. Product process X, process Y, product S, product T. The company operates a 15-hour day and have an average downtime each day of process X and process Y. The cost and revenue for each unit of each product are the direct material, direct labor, some overhead, and then some overhead, maybe it's variable overhead, then fixed overhead, fixed cost. Total cost is given, selling price is given. Sales demand restricts the output of S&T to 80, 50 and 80 units a day respectively. Which process is the bottleneck resource? So we have to identify which one is a bottleneck resource. It's not that it is mentioned about which one is a bottleneck resource, but here we are asked to identify which one is a bottleneck resource, which one has a constraint. So how do we identify which one is a constraint? So that is the um, concept what we have to take up now. Which one is a bottleneck resource? There are two products, product S and product P. Their time is given. The time taken in each of these processes is 5 minutes and 7.5 minutes. So consuming 5 minutes into the total number of each unit, it requires 5 minutes and 7.5 minutes, but the availability is only 1.5 hours. So how many units are produced? We see that 50 units and 80 units are produced. So in that case, total time available in processing. We have it as 1.5 hours. Out of that, the company operates a 15-hour day and have an average downtime each day of 1. This is 15 hours. I'm really sorry. It is 15 hours. Total time available each day is 15 hours. Out of that, the downtime is idle time, wherein there would be no production. So it is unproductive time, less downtime in each process. It is process X, it is 1.5 hours. So the productive hours are productive hours is equal to 13.5 hours, or because the requirement of time per product is given in minutes, so make it as into minutes is equal to 13.5 hours into 60 minutes, 810 minutes. So similarly, let's take it for product Y also. So for process X, the time is 15 hours, but the downtime is 1 hour. So it is 14 hours, so 840 minutes in case of process Y. The time taken in each of them, the total availability in process X is 810. How much time is taken for each unit of product test? Product test is taking 5 minutes to make one product, one unit of the product. So if it takes one unit 5 minutes to make 50 units, how much time is taken? And the availability, we have to remember it is 810 minutes in process X and 840 minutes in process Y. So time taken by each of these products, that is what has to be looked into. Just a minute. Time taken is given as 5 minutes, 7.5 minutes, 18 minutes, and 12 minutes. Okay. Um, Product S, product T. We have process X, Y. See, availability is 810 minutes. If 810 minutes is available in process X and every single unit requires 5 minutes, how many units can be produced is equal to, we have 810 minutes divided by 5. Here we have 810 minutes divided by 7.5. For process Y, availability is 840 minutes divided by 18 minutes. Here it is 840 minutes divided by 12 minutes. So the demand is 50 units of S and 80 units of T. That is the demand which is mentioned. So it says 47 and 70 for process Y. There is within the limit. 47 is less than 50, 70 is less than 80. Process Y, the time taken, process Y, each unit of product S takes only 5 minutes. With 5 minutes of time, they can produce as much as 162. So they will be able to cater to the demand. As many as 162 units can be made. 162 units can be made, but the demand is only 50, so 50 will be sold. Product T, 108 units can be made, demand is 80. But process Y, they are not even able to meet the demand. Only 47 units can be made, only 70 units can be made, which is less than the demand which is present. So the resource which is not making it possible to maximize their profit, because they 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 should be able to sell 50 and 80, but the time taken by each unit and the availability, they are only able to make 47 and 70. So the bottleneck resource is process